Okay, and we are live. So this is Real Talk episode 4. Thank you again for joining us. Today is just going to be me actually, and I'm going to do a little bit of a webinar because there's a common question that we always get. There's two markets that we always compare in our platform or from clients that we just want to quickly talk about, and it's two hot markets that we truly love. We truly love both Dubai and Addis Ababa as cities. I personally have gotten the chance to visit both cities. Obviously, I am from Ethiopia, and I visit Addis Ababa quite often. But from a real estate perspective, we at Aqaba, we feel like Dubai and Addis Ababa are fast-growing cities that present a lot of opportunity. And we know that some of you will never invest into either city, but some of you are on the fence and you're actually curious as to what is the direct comparison on both markets, right? So that is why we've prepared this webinar. We're going to do a couple of webinar series from time to time. This is going to be really informational. It's going to be purely in English, but we'll have Amharic versions as well. This is going to be purely informational and it's going to help you gauge what is the best decision for you. So why does this matter? Okay, why does this comparison matter? Why do you need to do your research? As you know, real estate is one of the biggest investments that people make in their lives. But 55% of the time, buyers wish they had done more research before making their decisions. So if you are international, this is even more true, right? Because you're now dealing with international markets that you might not be aware of. You might not have the local context that you need. Even locally, though, it's really important that you spend more time and do thorough research before making a buying decision. And that is definitely something that we always advise because there's two sides of the equation. Right? If there's a market that everybody is aware of, that everybody feels like it's hot, you might rush and you might buy into that market, but you might be buying at a high price already. Vice versa, you might be going into a cold market that you're not aware of. So at the end of the day, why does this matter to you? It's a big, big decision. Real estate purchases, real estate acquisitions are a big decision, and you should do research, right? Not really just, through excitement and emotion, but really be confident in your decision. That way you don't end up like the 55% who wish they had done more research. And that's why you're here, right? If you're watching this, if you're still here, you are somebody who wants to make the right decision, right? And you're already interested in the market, have options, right? You're somebody who wants to feel informed. You are somebody who wants to make the right decision for you because you're smart, you're savvy, you understand that you can invest either into Dubai or Addis Ababa, and you're comparing the two markets. And this is why we made the video for you. Who are we? We are Akababi again. Again, my name is Mikias, the co-founder of Akababi. And our team of advisors and experts have a combined 70 plus years. Okay, obviously I'm not 70, right? I'm not 70, but my point is our team, when you add up the experience of the team and our advisors, we have 70 plus years across real estate, data, analytics, finance, and all these things are important because we don't just look at it from one angle, but we're able to provide you insight across many different angles. And we're going to have more experts come on. Real talk is super important to us. We've just been very busy. The team is growing very, very fast. Right? We're growing very rapidly, but we have a great team that can help guide you. So that's a little bit of who we are. 70 plus years of experience across real estate, data, analytics, and finance. We've also done work in the three markets, the three main markets that are our customers, clients, and users of our platform typically ask about. So, we have advisors who have done work in the US with US brands. We have partnerships in Dubai through partners like and builders such as Soba Realty. And we do extensive work in the Ethiopian market through, working with the best builders, the most credible builders as well. So we have experience in three markets, and above else, we actually have taken the time, okay, to analyze and gather millions of data points for the best research for you. So our AI analyzes 1 million data points every single day. Okay, let me repeat that. Akababi AI analyzes 1 million data points every single day so you can make the right decision. So you can make the best decision, right? That is why we built our platform the way we did. And that is why we feel like we are a credible voice in the market, because we feel like we have the best real-time live data for your buying decisions. And of course, our experts and advisors over the past decade have sold over $100 million worth of real estate. So we know what we're talking about, and we know what things to look for when actually advising and doing such webinar series. So our experts have extensive experience across the real estate market, and we have sold over $100 million worth of real estate. And of course, we understand you too. That is the main thing. We understand you, because that is the main component, right? Without understanding you and your needs, there is nothing we could provide of value to you. So we understand you, and we typically work with 3 types of buyers, right? Typically, we work with retirees who are looking to relocate and who are looking to extend, their family legacy and story. And we understand their needs. We understand young families, right? Young families are looking for expansion. They're looking for, comfort for their kids. They're looking for optionality. So we understand the need of young families, and we understand the needs of investors as well. Sometimes it's a very logical decision when you're looking at both markets, when you're analyzing both markets. So we understand that it's not the same type of need, or you're not looking at the same type of parameters when making your decision, but across retirees, young families, and investors, we understand you, and we work with you. We work with buyers like you every single day. So let me rephrase that. We work with retirees, young families, and investors time and time again. So we really understand the things that you're looking for. So for retirees, we understand that you're not just buying a home to retire in. It's not just about that. You are choosing where your family legacy continues. Okay, it's a big decision. So many of our buyers, when they look at both markets, when they look at Dubai or Addis Ababa, they're looking to retire. Maybe they're based in the U.S., maybe they're based in Brazil, maybe they're based somewhere in Europe, and they're deciding, where to basically retire. But it's not just retirement. You're choosing where your family legacy continues, right? And this is a legacy that even your great-grandchildren can come visit, right? Because real estate is a physical legacy. You're leaving a piece of home for the next generation. So it's not just about your grandchildren or your kids, it's about your great-grandchildren. You want them to come see your home. You want them to benefit from the investments and decisions that you make. So we understand that. Young families, especially when the first couple of kids come, typically the space that you have is tight, right? So you want not just space, you want something that grows in value as well. So choosing the right area, choosing the right community, choosing just a place where the lifestyle and future, appreciation of that property is very important. And you want a home that gives your children more options, right? So one phenomenon we're seeing is, a lot of diaspora in the West, such as the U.S. or Europe. They just want to give their kids options, right? Maybe they were raised in the U.S. or they grew up there or they worked there, but they also want to have a home elsewhere, right? For the summers, maybe they want to instill certain values or principles or faith or whatever it is in their kids, right? So it's about options for young families, and making the right choice, right, can set your kids up to experience, the world fully. And of course, a better quality of life. So it's not just about, making an investment. It's not just about space. It's quality of life. Where is that home located? How is it? If I send my kids back for summers and they're staying there, or if we decide to move there as a young family, or even if I'm a local buyer in each market, right? It's what are the amenities? What does the healthcare look like? What are the things around it, right? So better quality of life is super, super important for young families, and we understand you too. Investors, we know that you want to 3x your money in 3 years, if that is possible, right? We understand that for you, it's about getting in low, right? You're getting in low, exiting high. So you want to make money on the buy. We understand, especially if you're just looking for an investment, rental value is really, really important. So it's not just about, making making money on the buy or getting in low and selling high. You want cash flow as well. You want to choose the right areas that have cash flow opportunities. So what does the rental data look like? What is, if I put it on Airbnb, if I get a long-term rental for a property, what does that cash flow look like? When do I break even? What is the appreciation chances, right? All these things you think about when making your decisions. So investors, we also understand you, and we work with clients such as yourself every single day. And of course, although every investment has a risk, it's not just about 3xing your money in 3 years. You want to make sure that you have some sort of certainty or the lowest amount of risk. And so we understand that you want to go in low, get exit high, and cash flow with the lowest amount of risk. So we definitely get it. But at the end of the day, everybody that we work with, we understand that you just want to make the best decision. It's like what I said earlier, right? You just want to make the best decision. You don't want to be the 55% that wish they spent more time doing their research, right? So all of you want to make the best decision, especially if you're staying here to this point. You are here because you actually want to get the right information to make the best decision. And that is why we are here for you. So, of course, if you're on the fence, if you're deciding about investing into Addis Ababa or Dubai real estate, I want you to consider these options, whether you are local based in ET, whether you are international but based elsewhere, like a diaspora. We think this is a great, great webinar for you. So this is the 3 areas that we're going to compare. We are going to compare growth potential, okay, global attention, and risk factors. Okay, we're just going to keep it simple on those 3 things. And over time, we are going to add on this. Okay, this is our team spent time doing research and focus on these 3 areas, but this is something that's going to evolve. Things are always changing. Things are always evolving. We'll compare different markets at different times with different headlines that come up, right? As you know, many things have changed. So this is going to be a growing series that we do, but just keep in mind, for now, we're just going to compare growth potential, global attention, and risk factors, as we think those are the most important features. Of course, it's very important to appreciate and admire both markets, right? If you look at Dubai today, it is one of the hottest markets in the real estate world, right? It's a real estate machine, very structured, very stable, very beautiful. It is the epicenter of real estate today. You can make that argument. It is the hottest one. I would say it's the hottest market in the world, of course, right? And all that happened in a very short amount of time. The transformation from the 1980s to the 2020s is quite remarkable. I mean, if you're looking at the screen, in the 1980s, that is what Dubai looked like. But look how fast things can change, right? From 1980s to 2020s, a lot of change has taken place. A lot can change in 30 years. If you look at Addis Ababa, it is very, very, it's changing very, very fast. So if you look at the 1980s, it's a picture of Addis Ababa. This is 2019, right? And then if you look, 2026. So even, I don't know how many of you have been going back and forth. Every time I go once every 4 months, about once every 4 months. And every time I go, even in 4 months, the trajectory of the change is very, very remarkable in the city. There's a lot of changes that are taking place. So in Addis Ababa, a lot can change in even 5 years, right? I mean, those of you who maybe haven't been back since like 2017, 2015, it is remarkable to see the changes that are happening. So what is the point of framing this is, of course, we're not saying that just to look at it now, but think when we present these data figures to you, have a future future outlook in mind. So let's look at the macroeconomics when we look at growth potential, right? So if you look at the UAE, the United Arab Emirates as a country, the GDP is $621 billion. The GDP growth is about 3.1% every year. Inflation is steady. It's 2.5%, which is really good. Household debt, loans, and debt securities. 24.78% of the population in the United Arab Emirates have access to financing. Basically, this is an indicator of the financing penetration in the market. So household debt, loans, debt securities, 24.78% of the population has access to some sort of financing. If you look at the population, you're talking about 11.47 million people in the United Arab Emirates, and these numbers are taken from the IMF. Okay, so these are direct screenshots from the IMF. So we'll leave it here. The United Arab Emirates, you're looking at a GDP again of $621.55 billion, GDP growth of 3.1%, inflation of 2.5%, really steady. Household debt of 24.78%, meaning access to finance. About 1 in 4 people have access to finance in the United Arab Emirates, and population of 11.47%. So now let's compare Ethiopia, right? It's a frontier market. Right? So the United Arab Emirates is considered an emerging market. Ethiopia is considered a frontier market, right? So let's look at the numbers. So GDP is $121.53 billion. Again, these are numbers from the IMF. GDP growth 9.2% year over year, which is really good. Inflation is high, 11.8%. Household debt, loans, and debt securities, no data at this moment. It's very, very low. As a frontier market, it's very new in its financing trajectory. Mortgages, consumer loans are still things that are entering the market. So there's not sufficient data on that. And it's basically close to zero or under 5%, essentially. Population is 112. This is numbers from the IMF. Typically, the ranges you'll get is from 112 to 130 million people. Okay, so when we add that, the direct comparison again, the GDP $121 billion, GDP growth 9.2% year over year, inflation 11.8%, which is high. Household debt, no data, meaning it's a very small number, unsubstantial. Population 112 to 132 million people. So this is a very, very, when you look at macroeconomics, right? And when you compare trends, growth potential, this is what you have to look at, right? You literally have to compare where are things at. So what's working in favor, right? Of course, the UAE is a more established and developed market, okay? The inflation is controlled, which is, inflation for real estate typically means asset prices go up when inflation is high. But either way, this is steady inflation and financings exist. What ET has going forward, of course, the GDP growth is 9.2%, which is higher. It's growing faster. It is a smaller market, it's a smaller market in terms of economy, but it is growing faster. Inflation is high, but when it comes to real estate, inflation means asset prices go up typically. Not too much financing options at this moment, but population, you're talking about a 10x population. So there's 10 times more people in Ethiopia than in the United Arab Emirates. This is very important to consider when thinking about, your real estate investment long term. So the United Arab Emirates is emerging. Let me repeat. The United Arab Emirates is an emerging market. Okay. Mortgage financing is accessible. Inflation is stable, and it has a relatively small population. If you look at Ethiopia, Ethiopia is a frontier market. Mortgage financing is not accessible. Inflation creates a little bit instability when it comes to just cost of goods. But for real estate, the positive side of it is it does mean asset prices go up. So when inflation happens with the currency, assets prices go up. And it's a very large population. It hovers between 8th and 10th in the world. So why is this important? It really helps us paint a picture. We'll come to our conclusions, right? We'll come to our conclusions, but this will kind of help us paint that picture that we need when seeing what the growth potential is in both markets. So we have the population, but now let's break down the population. And this is data taken from the United Nations Population Division. Okay. So if you look at the United Arab Emirates, which is the country this is the country that Dubai is in, the population again is 11.47 million. Average age, quite interesting, 31.6 years old. Okay, that is the average age in the United Arab Emirates. Fertility rate is about 1.21. Just so you know, for those of us who like having babies, you get what I'm saying? I'm just teasing you, but fertility rate for a healthy population, you need about to just replicate yourself, right? Because it's usually a man, a woman come together, they have a baby. But if you have one baby for two parents, you're decreasing your population. You need to have at least 2.1 babies. I don't know how you get the 0.1, but you need about 2 babies, okay, to at least sustain your population. When you fall below 2, it's a problem, because for every 2 parents, you can't just have 1 kid. You need to have 2 kids for the population to sustain itself. So fertility rate is 1.21. Again, these are numbers from the United Nations Population Division. And urban population is 80.7. So the urban population in the United Arab Emirates and the large cities, right, Abu Dhabi, Dubai, it's already 80% of the population already live in cities. Okay, net migration. This is people coming into the country, and again, currently the situation in the Middle East with the wars and everything taking place, I don't think it would be a fair comparison. So we're just going to use the 2025 numbers of net migration. So we're not using 2026, this is 2025 numbers. It's net migration, 158,634 people from around the world migrated into the United Arab Emirates in 2025. The 2026 numbers, of course, they're still pending, but because of the regional conflict, it's not, you can't just, maybe it's not as fair to look at that now. But so we're going to use 2025 numbers. So now let's compare Ethiopia, right? Ethiopia population is 138.9 million. Again, use the range of 112 to 138. Different IMF and United Populations Division, there's different numbers they give. Average age, 19.3 years. Okay, significantly younger, almost 10 years younger, right? Average age is almost 10 years younger than the United Arab Emirates. Fertility rate, 3.72. Us, I guess Ethiopians, we love having babies. It's a good thing. It's a good thing. Okay, we know how to make babies. 3.72 is the fertility rate. Urban population is very, very interesting, especially for those considering, the long-term value. Urban population is 22.9%. Okay, so the cities, although they feel very packed, in the grand scheme of things, it's only 22.9% of the population lives in cities. And net migration in 2025, 24,054 people, net migration, have moved into Ethiopia. Okay, so again, let's compare population. Let's compare quickly. Population UAE, 11.47 million. Population Ethiopia, 138.9 million. Average age in the UAE, 31.6 years old. Average age in Ethiopia, 19.3 years. Fertility rate, 1.21. So that means for every set of parents, they're having 1.21 babies, right? Healthy population, the one that kind of repeats itself, you have a minimum of at least 2 kids to sustain the population. But in the UAE, average fertility rate right now is 1.21. Average fertility rate in Ethiopia is 3.72. So again, Ethiopians are really good at making babies, which is funny. Urban population 80.7 in the UAE. That is 80.7% of people live in cities in the United Arab Emirates. And if you look at Ethiopia, it's 22.9% of the population live in cities. Net migration, the UAE 158,634. Net migration in Ethiopia 24,054. This is good numbers for us to compare because this tells us right where things could go. Okay, this is important data for us to look at. So the UAE has a smaller population, has middle-age demographic, low fertility, high urbanization, high immigration. Ethiopia, large population, young demographic, high fertility, low urbanization, low immigration. Okay, so those are important to look at. Dubai is essentially growing because of immigration, business, tourism, global workers, right? It's attracting a lot of that global talent. However, it is quite interesting to, especially when things happen in that region, how much of that global talent does stay is a question to ask. The middle-aged demographic also, it's good. It's not too bad. Like there are older, like Europe and other markets and in the West, the United States have higher age demographics. But it is quite interesting to compare it to a very young population like Ethiopia, right? So when you think about first-time home buyers or new market entrants, right, it's important to look at the population range. That way you can see, which has long-term yield. So low fertility, high fertility, that is interesting indicator of growth, right? You need for every set of parents, for every 2 parents, you need to have 2 kids to sustain the population. ET 3.72, man, almost 4. So doubling almost, right? But UAE does have low fertility. And urbanization is important too. That literally signals growth in cities, right? So UAE is already at 80%. ET is just at 20% right now. So that's good to keep in mind. But of course, forecasts are important as well. And so let's look at we'll look at what each city is planning and which each country is planning to grow in. And then we can kind of analyze the growth potential of each. So the United Arab Emirates plans to expand its GDP from 419 to 860 billion USD by 2031. And again, the plan is to attract industries, professional services, AI, data centers, logistics, just to become an epicenter of not just oil, but also other industries as well. So this is by the government of the UAE has planned to attract industry and innovate in technology, as well as to have a blueprint on the influential aspects of the economy to grow in non-oil industries. So that's really important to keep in mind, and to their, to the UAE's record, like to their record and commendation, they have done a great job of that, right? They're attracting international business. They have emerged as a hub. One thing that you have to keep in mind, especially for knowledge-based industries, especially AI and data centers, as well as just professional services, I think it's important to keep in mind that we're still going to see the effects of AI and robotics on the industry, not just the industry, but just economies, how that shapes economies, right? So if you are shifting to professional services in an AI era, what would that look like, right? Because you might not need as much professional services as you do, technicians and young bodies, right? Young people to do the work. So it's quite interesting as we see the shift even in the United States of professional services. I think that's an important caveat to keep in mind as for the future plans of the United Arab Emirates. So let's think about Ethiopia now. If we look at Goldman Sachs report and use their calculations, by 2025, 2025, right? We're in 2026. By 2020, by 2075, Goldman Sachs predicts that Ethiopia will be the 17th largest economy in the world. That is the equivalent of Indonesia today, right? So according to a Goldman Sachs study, by 2070, let me say it again. According to a Goldman Sachs study, by 2075, Ethiopia is predicted to be the number 17th largest economy in the world. Again, this is a very far forecast. And the downside of this study is the study is primarily based on the use of population and demographic data to forecast it. So ET does have a population advantage. It has a young population, right? This is going to be young people that are growing up in an AI first world that can adopt these technologies, that can develop new technologies. I mean, even in various aspects of the tech space, you are seeing the Africa fintech ecosystem really develop and become world class, right? So that is kind of how the study took into account those demographic factors, but you have to also account, again, the caveat is AI. How will AI disrupt that? Does in an AI world and robotics world, does more population essentially mean more productivity? Because GDP is what? Productivity per capita, productivity per person. So with AI and robotics, you can still get productivity without a person essentially. So I'm just giving you the information, right? So you can make the conclusions that you want, but it's important that we just give it to you raw. So in summary, if you look at growth potential, the UAE, or the United Arab Emirates, which is the country that Dubai is in, promises stable near-term growth due to developed economy, ease of financing, high urbanization, and net migration, making it a hot market right now. That is the summary that we can give you on growth potential. If you look at Ethiopia shows exponential long-term growth, potentially due to population growth, low urbanization, and lack of financing options, making it an early market to get into, meaning this is a market that is just at the cusp of growing, right? And you have to basically time it, understand the market, get the local context in order to really benefit from it. So again, just to repeat, Dubai, or the United Arab Emirates, promises stable near-term growth due to developed economy, ease of financing, high urbanization, and net migration, making it a hot market right now. Ethiopia, Addis Ababa, shows exponential long-term growth potential due to population growth, low urbanization, and lack of financing options, making it an early market. Because let me ask you, imagine if the economy grows, it's growing 9%. Imagine if more people move into the cities. Imagine if net migration improves. Imagine if financing becomes accessible, right? All these things we're going to talk about in the next section, so you can gauge for yourself if you feel like those things are likely to happen or not. But if all those things happen, you're talking about exponential returns, because this would be super important. So let's really get into the city's real estate dynamics though, right? This is where we go into the details of like, what is the actual dynamics of the real estate market in each city. So we're going to look at real estate stats, global attention, and investment policy across both markets. So we're going to compare across Dubai and Addis Ababa. We're going to compare real estate stats, global attention, and investment policy. So if you look at Dubai, average price per square meter in Dubai, and this is according to Property Finder, askababa.com, which is the leading real estate platform in Dubai. Average price per square meter can range between $4,885 to $8,500, depending on the market. Rental occupancy rate is about 61.72%. That's really, really good. Office occupancy is 95%. Again, these are numbers from 2025, 2026. The current situation, you do have to take that into account, but it's showing really, really great occupancy, 95%. Average rental yield 6.25 to 9%. Annual appreciation 8 to 12%. So really strong numbers, a little higher entry price, but it's something to definitely keep in mind. If you look at the average price per square meter in Addis Ababa, $700. Average price per square meters in Addis Ababa, $700 to $3,000 USD. Rental occupancy is about 48%. That's data from askababa.com, the leading platform in real estate in Ethiopia. Office occupancy is not really available at this moment. Again, it is a more frontier market. It is something where the data is still being accrued, right? But office occupancy, there's not enough information to give you any data on that. Average rental yields 8% to 11%. Annual appreciation 10 to 15%. So what does this tell us, right? Average price per square meter in Dubai is pretty high. You're competing with basically, this is global prices. You get what I'm saying? You can compare these prices to the New Yorks, Miami's, the DCs of the world, as well as other parts of like London, etc. It's a very hot market, hot market, right? So it's firing on all cylinders, but that means there's a high entry price to get into right now. Rental occupancy is steady demand, right? There's a lot of tourism. There's a lot of people visiting Dubai on a consistent basis. So there's steady demand. Office occupancy is very, very strong. And that is a good indicator. Average rental yields are stable and very low risk, meaning you basically, because of the immigration, because of the tourism, because of people always coming in, you can tell that it's very stable and it's a lower risk. Annual appreciation, predictable and steady growth. Addis Ababa has a lower entry price, actually. If you compare it, it's a hot market. I mean, it's a really good market too, because if you think about the political landscape, and it's the political capital of Africa. Africa is the fastest growing region by population, and Addis Ababa is the political capital of it. So there's a lot of international agencies. Tourism is taking off. We'll get into that a little bit later, but the price is still very low. It's a low entry price right now. The market is still, there are some areas that are more expensive, but on average, even in the top markets, you're still looking at a $3,000 per square meter entry price, right? Even in the highest market, which is really good. It's substantially lower, so you can get in lower. Rental occupancy is 48%. It is low, but it is growing. And that, of course, is why the pricing, the market entry price is a little bit lower. Office occupancy, I can't really say much on that right now because there's not enough data. Average rental yields are growing, yet require more research. The rental yields are strong, right? But we need to accrue that over more data points. Appreciation shows need for complete and modern housing. So the reason finished units appreciate, you have to remember, right? Because the reason the Addis Ababa real estate annual appreciation is significantly higher is because finished units are just worth so much, right? Think about it. It's 130 million people with 20% urbanization. Only 20% are living in cities today. So people are moving in, right, into the city, and there's a limited amount of housing available, right? So that means that finished housing, finished units appreciate much faster because of the demand and supply, right? There's not enough supply to meet the demand in ET. And as builders, credible builders are finishing and completing homes, finished units that are modern and nice, they're appreciating crazily because they're just not enough for the market right now. So that is an upside. So if you find a good entry price, if you find a finished unit, if you find a builder that is credible and you trust and you get into the market with, you're talking about a very great opportunity to have some fast appreciation, right, at a low entry price. So that is something to keep in mind. So now let's visit financing. This is very, very important and probably the most important section of the whole thing. This is really the one that makes the most amount of sense. So this is very important because this is something that could ignite both markets very much. So United Arab Emirates, only 24% of households have existing debt obligations in the form of mortgages, securities, etc. Right? So 1 in 4 people have access to financing. In ET, in Ethiopia, that is not even a number I can give you because it's low. Okay. Why does this matter? When financing becomes easier, the cost of capital drops, which boosts the value of the asset, driving current market prices upward. So when financing is easier, homes are more expensive, simply put. Okay. So when financing is easier, when more people have access to mortgages, the asset price just goes up because it's easier for you to buy it, right? It's easier for you to buy it because since more people have access to financing, they can pay more. And then if people can pay more, the market price goes up. So if you look at, let's just say the United States compared to the United Arab Emirates, 69% of residents in the United States have access to financing compared to 24%. So you can see there's levels to this, right? And there's still a journey the United Arab Emirates and Dubai has to go through, right? Because so there's room to grow. So 24% in Dubai have access to financing, 69% in the United States. In Ethiopia, it's near 0%, right? So you can see the trajectory from frontier economy to a developed economy, how it goes. Now, if you look at the United Kingdom, which is like, the Englands of the world, England, Europe, the United Kingdom, basically, it's at 76%. Okay. So it's important to remember the cycle that assets go in. So when you have access to financing, again, asset prices go up. So what does that mean? When you don't have access to financing in a market, asset prices don't grow as fast. But my question to you is, what happens when you introduce financing in such a market? That's when it gets interesting, right? So there's a point. There's always 0 to 1 is always the hardest part, right? But what happens in a market that hasn't been introduced to financing when people can mortgage a home? You see, for those of you who are not aware, okay, who are not aware, if you're an international investor or you're somebody looking to relocate, etc., a lot of these homes, even in Dubai, a lot of these homes in Addis Ababa and Dubai, you're paying a lot of cash up front. People are saving and paying cash. It's a foreign concept. If you're in the United Kingdom and the United States, it's a foreign concept. We used, 30-year loans, right? That's just a minimum. Now what? The United States is experimenting with 50-year loans, right? But in emerging and frontier economies, that's not the case. So the asset prices are a little bit suppressed. So Dubai, easier to get a loan. Demand goes up because it's easier to go to the loan. And when demand goes up, market prices can go higher. So let's just summarize. Dubai, it's easier to get a loan. That makes demand go up. When demand goes up, market prices go higher. Okay? Direct comparison now, Addis Ababa. It's harder to get a loan, which makes demand go lower than it could be. When demand goes down, prices go lower. So there is a little bit of a suppression in a market like Addis Ababa versus Dubai. So in Dubai, asset prices are higher because financing is already somewhat available. And this cycle will continue to impact the real estate market because Dubai is just at 24%. 24%, right? Still has to go to 69% like the United States, and then still has to go to 76%. So you're talking 24, Dubai's still at 24. What happens when it goes to 69? Yes, asset prices will continue to grow. They're already very high. The entry prices are very high, but they will continue to grow. But then what happens when it goes to 76? So you can see the homes right now, when more financing is available, the asset price will go up. But now when you compare Addis Ababa, asset prices are lower because financing is not readily available right now. So that is something you have to keep in mind as an investor. Because if you have the cash today, what happens when mortgages are introduced? Demand is going to go up. When demand goes up, what happens to your asset that you have? The value goes up, right? That's essentially what it is, because now more people can participate in the market. So when more people can participate in the market, there's demand, and you can get a 10-year loan. Let's go. We don't have to deal with 30. We don't have to deal with 50-year loans right now. Let's just start with 10, 5, right? More people will participate. More people will want housing. More people will want to own their house. So then demand will go up and asset prices will go up. The question you have to ask yourself is, will Ethiopia and Addis Ababa ever get to this point? Like, will the economic policies and ecosystem actually get it to this point? That's a question we have to ask. So let's look at recent events. In order to achieve this, in July 2024, Ethiopia floats its birr, meaning it's, instead of a controlled currency market, foreign exchange market, it's market-based now as of July 2024. June 2025, foreign banks are allowed to enter the market into Ethiopia. So, when any market opens up, whenever it's about to introduce these things, you can look at China. It first opened up its banking sector, right? As it was about to grow. You open up telco, then you open up banking, then you open up somewhat utilities, then you allow foreign companies to enter, right? And then if you look at February 2026, Ethiopia allows foreign accounts to be held, meaning you can hold foreign currency. So the banking sector is strengthening and economic reform is happening. Again, in Addis Ababa, Ethiopia went by a market-based. So let's just make sure we really get this point. So 2024, Ethiopia decided to float its birr, meaning it's now market-based. Okay, the foreign exchange is now market-based, July 2024. Then June 2025, Ethiopia would allow foreign banks to enter into the market. We're seeing those developments take place. And then February 2026, Ethiopia is allowing foreign accounts. Now, there's two sides of the equation. I understand with these sort of changes. There's the market as it stands today, then there's what the market could be tomorrow. And it's important to keep these in mind because, I think there's some people that are happy with these changes, some people that are not, and I understand it does make inflation go faster, et cetera. But if this does lead to better financing options, better, optionality for the consumer, it could be a positive sign because right now people are living in Addis Ababa. It's a lot of cash-based payments, cars. Everybody's buying their car in cash. Everybody's buying a house in cash, right? So everybody's cash dry because you're spending all the cash. But if financing becomes available, that circulates the economy, and foreign banks coming in could introduce more aggressive, not at the disregard or to the detriment of the consumer, but actually in behalf of the consumer. I think it would be very nice if people could buy their homes on financing and get to participate in the market. So as the banking sector strengthens, you can expect asset prices to increase in Addis Ababa. As the banking sector strengthens, just like you see in as we compared, Dubai as an emerging economy to a developed economy, look at Addis Ababa as just going from a frontier economy to a emerging market, right? Right now, let's just say it's near 0%. Imagine what happens even if you get to 10%. If 10% of people could get access to financing, it dramatically changes the game in real estate. You're talking about participation that you haven't seen yet. You're talking about those young professionals, maybe in their late 20s, early 30s, actually getting a chance to get into the market because they haven't had enough time. They haven't had enough time to save the money, right? They haven't had enough time to just save all the cash to make a full payment on a house. You're talking ease of financing means it's easier for builders to develop. There's so many benefits that can come when the consumer gets access to actual financing and financing is democratized, that I think it is a good indicator of asset prices to increase. So don't forget, when financing becomes easier, demand goes up. When demand goes up, asset prices go up. Okay. When financing is harder, demand goes down. When demand goes down, asset prices can go down or stagnate. So even if Addis Ababa goes from 0 to 10 to now where Dubai is at 24, you're talking exponential change. So that was financing, but now we have to compare global attention because perception is very, very important. How the world views a city is very important into its asset valuation. So we're going to use a very popular tool called Google Trends, research tool that can compare keywords and what people are searching for. Okay, so this is Dubai and United Arab Emirates. If you look at the screen, if you look really closely, let me actually make it bigger so you can see. This is the global trends data for the United Arab Emirates and Dubai. So it's pretty good search volume. Now, when you compare Addis Ababa and Ethiopia, it's significantly lower. So again, let's just be clear. The blue line at the top is Dubai, global attention. The red is the United Arab Emirates, which is the country that Dubai is in. If you look at the yellow line, that is the term Addis Ababa. And if you look at the green line, that is Ethiopia. Okay. And significantly, it's clear that the United Arab Emirates is more popular than ET and Addis Ababa at this point. That's just very clear. Is there room to grow? Let's look at larger markets. So let's look at interest in the United States or China. Now you can see orange is the United States, purple is China. So there is room to grow. Again, there is still room to grow as you go from that emerging market. As you go from that emerging market to that developed economy, there's still room to grow. In Addis Ababa from frontier to emerging, right? So there is growth potential. Here is a clean comparison of the interest in each market. So if you look at Dubai, Dubai is a 6 on worldwide attention, whereas Ethiopia, let's just compare the entire country because Addis Ababa is 0 right now, but Ethiopia is a 1. The United States is a 38 and China is a 13. Okay. So this is just data as it is on global attention scores. So, Dubai is a 6. Addis Ababa, Ethiopia is, 0 to 1. United States is 38. China's 13. This is good to compare and see. So Dubai, it's clear that the world is already paying attention. There is attention already on that market. So when people pay attention to a market, typically that market does better, right? But the question that we have to ask is, how's it doing as a destination? So it's great. I mean, top 6 destinations in the world. if you compare the top 6 destinations in the world, again, this is from the International Organization of Immigration, you're looking at Dubai as a number 6 destination for immigration in the world, which is a good thing to look at. Increasing awareness, right? So if you look at new media, influencers, Dubai is constantly inviting influencers from the social media, traditional media, celebrities. Dubai is the celebrity capital, right? So that is going to keep perpetuating the machine of harnessing global attention to increase the city's brand. On top of that, Dubai does have the second busiest airport, at least in 2025. Of course, currently the situation, the regional conflicts, et cetera, might have skewed these things, but let's just compare 2025 numbers. So Dubai does have the second busiest airport in the world. So if you look at the numbers, number one actually is the Atlanta Airport in the United States, and 2 is the Dubai International Airport. So very good. So when it comes to Dubai, Dubai is already getting the world's attention. It's people are paying attention to it, people are flocking to it, etc. When you look at Addis Ababa, though, Ethiopia, the world is still getting a new perspective, right? So it's good for you to compare that where attention, because you have to know if you're talking about investment, or even if you're just looking for long-term appreciation, you have to understand where attention is going to go. They call it attention arbitrage, right? Where's attention now? Where's attention going to go? So if you look at Africa as a tourism sector, just as a whole, Africa is the fastest growing tourism region in the world. Again, this is by UN Tourism. So it's the fastest growing tourism region in the world. I'm not saying it's the largest, I'm saying it's the fastest growing. And Addis Ababa is performing very well, 15% year-over-year tourism growth to Ethiopia. So it's rapidly getting more attention. It's the top 3 best performing destination in Africa, which is the fastest growing destination, continent or region in the world. And Addis Ababa is the top best performing 3. Let me make my screen bigger so you can see it. So yes, if you look at Ethiopia, you can see it's number 3, and it is the largest aviation hub and largest airport in Africa is coming to the market by 2030. So it's set to grow, right? So one thing you have to look for in a city does it have an aviation hub? Because where trade, logistics, travel, events happen, those cities, if you just look at through the history of time, those cities have always performed better. So Dubai obviously has one of the largest airports in the world already, has global attention, it has tourism, it has influence, etc. Ethiopia, Addis Ababa is positioning itself. It already has the largest airline in Africa, right? But it's positioning itself to really become a regional hub. And the Bishoftu Airport is going to be the largest airport in Africa by 2030, and that will exponentially increase Addis Ababa's ability to become an aviation hub and destination, especially in that part of the world. And if you look at recently, I don't know if you guys watch live streams, if you're still watching a live stream, not like this one, but a little bit more fun, I would say. The live streams and the creator economy is actually painting a new perception to Ethiopia. So if you look at creators, they're coming, they're bringing new attention, they're bringing new perspective to the market. It's really amazing to watch. And that itself is something new. So of course, all the celebrities and the existing established creators are flocking to Dubai, but there is a new sect of creators and even the largest streamers in the world that are visiting, and local, by the way, local stars too emerging. There are a lot of local stars that are getting global attention as well, based in ET. So it's a new perspective. Addis Ababa is getting a new perspective. People are shocked when they see the city, right? They can't believe it. There's a little bit of a buzz happening around the city. So these are just some things to keep in mind if you want to look at future growth, where attention is going. It's very important for you to know where attention is going. It's called attention arbitrage, right? So you have to know where attention is going in order to signal growth. That's how you can guess growth. So Dubai has a lot of global influence. There's room to grow. Still has room to grow though. Net migration is already high. If you look at Addis Ababa, from an influence, when I say influence, I don't mean like political influence. I'm just saying global attention. Maybe attention would have been a better word, but it's low right now. Global attention is low, but it's positioned to grow. There's new attention, there's interest, etc. And net immigration is low right now. So you do have to understand these things in order to see. So you're basically assessing, okay, what market is priced higher, what market is priced lower than it should be, and which one is positioned to grow. So now let's address the risks of each market. Kind of the boring part. No, I'm messing with you. It's still important. So Dubai, the risks in Dubai, oversupply of housing, it is a risk because, as you see, the local population is not as large as a country like ET, but the building is heavy because of net immigration. But if there's a risk, if there's a regional geopolitical risk or something, and people leave or people flock out of it or whatever the case, or tourism slows down, there could be an oversupply of housing. There has been talk of a market correction. Everybody talks about a market correction. And then, of course, expatriate population. So there's a lot of expats in the country. It's something to keep in mind, right? Because it's not local demand, it's more so international demand that's immigrating there or just visiting there. So you have to keep that in mind. These are internal risks. So we're separating the risk, by the way, internal and external. So Addis Ababa, the risk is it's a frontier market. Let's just be plain and simple. Frontier market means it's still like it's not even emerging yet, but it's frontier. Construction risks are finishing materials, internal conflict, internal instability, and policy changes are the risks, right? Because the policy, the policy for housing, it's rapidly heading in the right direction, and even foreign ownership is now allowed. So there's a lot of positive signals as to where things could go, but those things just happened, right? So it just happened. It's very early. So if we have to be, in all transparency, full disclosure, that is a risk that we have to keep in mind. And when I say finishing materials, because inflation is high, because the local currency and inflation is high, it's harder for builders to get finishing materials. That is a risk that you have in Addis Ababa. So you have to really make sure that you are getting localized and contextual knowledge when you are going into the market. But when you compare the two markets, that's the risk that you get. So now let's compare external risks. So the biggest external risk, I would say, in Dubai is just proximity to a hot region. Currently, there is a regional conflict happening, and we've been happening, for a couple of months at this point. But that proximity was really evident, and it's just, I think, image-wise, it is something to keep in mind. Is it as safe of a haven as it was portrayed to be? I would say yes, but there are some risks that you still need to keep in mind when underwriting assets, because real estate is subject to damage if anything does happen. How does that affect migration? How does it affect those things? That's just something to keep in mind. So proximity to Iran during the regional conflict is something that you have to keep in mind when you're thinking about just anything related to Dubai, and that's just the reality of the market. Addis Ababa, of course, there is regional instability, potential conflict with Eritrea, and there's also spillover from civil war in Sudan that needs to be kept in mind. This is just risks. We're assessing external risks, right? So this is all full disclosure. This is external now. So there's Dubai, proximity to Iran, Addis Ababa, regional instability in terms of conflict, potential conflict with Eritrea, spillover from Sudan war. So you just have to keep that in mind and the ramifications that come with that. But let me just make this point. Everywhere there's instability at this point, right? The market is shaky across all the markets. You are seeing a lot of people just move. You're seeing people move around, man. This is a time where people have moved around and they're making best decisions for them. So you have to do the research, as we said, helping you do the research, but you have to assess the best situation for yourself. Another external risk, again, is foreign exchange volatility. So if you're purchasing an asset in Addis Ababa, one thing you do have to keep in mind is, depending on the market that you're in, if the currency is losing value faster than your house grows in value, your house can actually lose you money. You get what I'm saying? So if the asset appreciation is slower than the currency depreciation, there is that volatility risk that you have to keep in mind, and that is just a reality. So you do have to really understand the market and find neighborhoods that grow really, really fast to outpace inflation. So conclusion, and let me say this too on this one before we go to conclusion. I would say this, especially if you are a international investor that is looking to, if you have like USD or Euro, etc., and you plan to buy and then extract back your money in a hard currency, that is the risk that you face. However, if you are a local investor, there is no better place to put your money than a hard asset, right? So hard assets, they grow when there's inflation, and that's what we're seeing in the market. So you have to, if you're a local market, if you basically have butter, right? It makes sense to put it in a hard asset. I'm not even saying it has to be real estate, trust me, but I'm saying it's better to put it in a hard asset that can grow than to just keep it in the bank. That's just facts. You get what I'm saying? However, if you have a hard currency, you're expecting to basically, through foreign exchange, hard currency like USD, Euro, to birr, let it grow in birr, and then extract in the hard currency. Okay, that's when you have to, do the math a little bit. And that's where we can help you. So conclusion. So Dubai is a strong choice for investors who want liquidity, financing, rental income, and lower execution risk, right? It does require a higher entry price though, right? It does require a higher entry price, and the growth potential is not as exponential. Addis Ababa is a stronger choice for investors who are patient, have selective and local information, meaning you have contextualized knowledge to the market, right? And you can plan and are looking for long-term asymmetric upside. This is a really good market. It just opened up, and I think it is positioned to grow exponentially, and it is at a lower market price. So if you enjoyed this, let's connect. Check us out at akababi.com. From time to time, we'll do deeper dives in webinar series such as this. Our goal, again, is to make ownership one click away. And that means from, insight to investment, we want it to be one click. So our platform, check it out at akababi.com. We have a lot of data points. We aggregate and analyze over 1 million data points every single day. Okay. So you can have the best information. And again, this information is not just based in ET. We actually compare the world's data. So we actually have data in both markets that you can compare when making your investment decisions. Our AI can give you real-time answers on the market, and our experts can then connect with you. So let's connect. Thank you. And if you enjoyed this, let us know. If you felt like there are some takes that were wrong or misguided, let us know. If you want to come on and join us on future Real Talk episodes, as we're going to have more team members join. We're going to do some episodes in Amharic. We're going to do some episodes in English. We're going to have experts from all over the world come in, give their takes. This is real talk, and we keep it real. And thank you again for joining. If you watched this far, wow, you just got to reach out at this point if you're still here. But we appreciate you. Let's connect. And thank you again for Real Talk, for joining us on Real Talk episode 4.